Welcome to the Bullvine Podcast, your go-to source for inside stories, cutting-edge research, and the latest updates in the world of dairy farming. For the 74th episode, we look at the October Dairy Products Report and some unforeseen trends. So please grab a glass of milk, sit back, and let's get started with this week's episode.
Did anyone anticipate the glide upon cheese production or the stumble in butter output? The October Dairy Products Report unfurls unforeseen trends, prompting a reevaluation of market dynamics in the dairy industry. Cheese production, while inching upwards by 1.0% from last year, nonetheless reveals a downward bump that has tongues wagging among market analysts. U.S. cheddar production plunges by 3.1%, casting uncertainty on market predictions. Are we witnessing the onset of a more profound market shift? Such insights, crucial for dairy farmers and industry professionals, provide a deeper understanding of the industry's current state and future direction, empowering stakeholders to make informed decisions.
As the October Dairy Products Report unfolds, a nuanced narrative of the U.S. dairy production landscape emerges. Notably, there is a slight uptick in overall cheese production compared to the previous year, nudging upwards by 1.0%, despite certain expectations suggesting otherwise. This indicates a modest recovery from the stagnant figures observed in September. However, within this broad category, cheddar, a staple in the American cheese sector, continues to underscore the industry's complexities, as its production notably dipped by 3.1% from October last year. This contraction indicates the challenges cheesemakers face in maintaining cheddar's demand momentum, potentially signaling shifts in consumer preferences or competition within the cheese category. Turning our gaze to butter, the situation presents a contrast. Here, production witnessed a 3.1% rise compared to last year. Although this is a deceleration from the double-digit growth rates of previous months, it remains a positive indicator of steady consumption patterns. The availability of ample cream supplies continues to support this production, reflecting a favorable supply chain status. Meanwhile, non-fat dry milk (NFDM) sees developments of its own. While production estimates exceeded forecasts by 7 million pounds, it navigated a balancing act with skimmed milk powder (SMP) production to present a combined output close to expectations, albeit showing a 9% year-over-year decline. This decline poses questions about domestic and international demand adjustments that stakeholders must address to avoid potential market imbalances. The implications of these trends are multifaceted. The cheese market, grappling with the challenge of a waning cheddar demand, may see alterations in pricing strategies to stimulate consumer interest or explore export opportunities. Butter's steady growth suggests relative market stability, offering some insulation from volatility. Still, it also underscores the need to monitor cream supply chains. In the case of NFDM, producers must remain agile, whether by pursuing emerging markets or refining production processes to maintain economic viability.
The October Dairy Products Report may have left stakeholders pondering the lackluster performance in the cheese production sector, particularly cheddar, which saw a notable 3.1% decline compared to the previous year. Such figures raise pertinent questions about the underlying causes. Various factors may have contributed to this decline, including shifts in consumer preferences and potential economic constraints influencing buying behavior. Cheddar, traditionally a staple in the American diet, is losing its edge amid new cheese varieties emerging. The proliferation of artisanal and specialty cheeses might redirect consumer interest, creating a competitive landscape that challenges cheddar's dominance. Additionally, recent health trends emphasizing lower fat and salt intake could lead consumers away from processed and mature cheeses, further impacting cheddar's popularity. This decline in cheddar production could signal a shift in consumer preferences and competition within the cheese category, prompting stakeholders to consider diversifying their product range or adjusting their production volumes. Despite the downturn, cheesemakers are navigating these turbulent waters with strategic diligence. By tightly controlling production volumes, they deftly sidestep the risks associated with an oversupply, which could otherwise drive prices down and exacerbate market challenges. This careful balancing act suggests an acute awareness of market signals. It highlights tactical production adjustments tailored to current demand dynamics. These producers demonstrate agility and foresight by aligning output with actual market needs. Furthermore, cheesemakers' ability to manage production efficiently in such a volatile environment reflects broader market trends. Their savvy approaches safeguard their operations and represent a bigger picture of an industry attuned to consumer demands and supply chain fluctuations. As we navigate these dynamic conditions, the emphasis will likely remain on adaptability and market responsiveness as key strategies for sustaining competitiveness across the cheese production landscape, underscoring the crucial role of each stakeholder in shaping the industry's future.
While butter production was up 3.1% from last year, the pace has notably decelerated compared to previous months. In stark contrast to the impressive growth rates of plus 15.1% in August and plus 12.1% in September, October's figures reveal a significant downshift. This slowdown in growth could be attributed to several factors, including seasonal fluctuations in milk supply and changes in consumer demand, potentially influenced by rising health consciousness among consumers. The immediate impact on the market could be multifaceted. On the one hand, a slowdown in production growth may help stabilize butter prices after periods of surplus-driven price cutting. However, it may also signal a more cautious approach from producers, anticipating either a plateau in demand or strategic adjustments to manage cost and supply chain challenges. As butter remains a staple in the American diet, these shifts in production strategy could trigger broader market implications, from retail pricing to export capabilities, and demand forecasts will need to be analyzed closely in the coming months.
The non-fat dry milk (NFDM) and skim milk powder (SMP) sectors are experiencing a notable downturn, with a 9% year-over-year decline. This decrease is more than just a figure. It reflects broader shifts within the dairy industry. Such a reduction prompts the question, why? This decline hints at an intentional realignment of resources, as fat and protein components, which would traditionally bolster NFDM and SMP output, are redirected elsewhere. The sectors seeing this uptick include milk protein concentrates, MPC, which have increased by 84% year-over-year. Miscellaneous dairy products like ice cream, sour cream, and yogurt are also beneficial, as they are likely to receive the redirected fat and protein, leading to increased production and potentially higher margins. The reallocation of fat and protein specifically into MPC signals a strategic focus on products with potentially higher margins or demand, implying a calculated industry response to changing market needs. As dairy producers navigate these tidal shifts, understanding this resource reallocation offers insight into their broader production strategies. This strategic transition raises the question, are producers scaling down NFDM and SMP production to optimize financial returns or adapt to evolving consumer tastes? Given the dynamic dairy market, these are essential considerations for stakeholders who aim to keep pace with shifting trends.
In an unexpected twist, the October dairy products report revealed that dry whey stocks were 10 million pounds lower than anticipated, while lactose stocks fell short by 5 million pounds compared to forecasts. This deviation from expected levels prompts a deeper examination of the factors at play and their potential implications on supply chains and the pricing strategies in the dairy sector. Industry experts suggest that the dwindling stock levels of dry whey could be attributed to increased domestic demand and expanding export markets. As consumer preferences evolve, there is a marked shift towards incorporating dairy-derived protein sources in daily diets, propelling demand. Concurrently, lactose stock reductions might stem from intensified competition for dairy solids among manufacturers focusing on enhanced dairy-based product lines, particularly in the infant formula and sports nutrition segments. Such discrepancies pose intriguing challenges and opportunities for stakeholders. Lower stock levels can exert upward pressure on prices, benefiting producers in the short term. Conversely, sustained shortages could lead to supply constraints, potentially hindering consistent product availability if not strategically managed. As the market grapples with these unexpected fluctuations, it remains pivotal for dairy producers and suppliers to adjust their operational and pricing strategies agilely to maintain equilibrium and capitalize on emerging demand trends.
The latest figures in U.S. dairy production signal a transformative phase, raising critical questions for stakeholders. With cheese, particularly cheddar, witnessing subdued demand, production strategies could be reevaluated. Cheese producers might benefit from exploring diversification to include trending varieties that align with evolving consumer tastes. Butter's moderate growth, despite a slowdown, suggests stable consumer interest, yet also highlights the need for sustained innovation to capture new market segments. Non-fat dry milk, NFDM, and skim milk powder, SMP sectors reveal pressures that might push processors to optimize efficiencies and explore alternative uses for these products. Emerging production trends also create a backdrop for strategic reassessment. Adopting advanced farming techniques and technology could enhance dairy farmers' productivity and cost-effectiveness. Meanwhile, industry professionals may need to focus on supply chain flexibility and market adaptation strategies to buffer against unexpected shifts. As miscellaneous product utilization grows, pinpointing areas such as specialty ice creams or cultured dairy goods could unlock new opportunities. Understanding consumer preferences and proactively adjusting to shifts in demand could offer pathways to sustain and grow the market footprint in a competitive landscape. The current production insights call for an agile approach to navigating the future dairy terrain. Traditional practices should be blended with innovative foresight to ensure industry resilience.
The latest U.S. dairy product production report paints a nuanced picture of an industry in flux. While cheese production is showing modest growth, cheddar continues to face challenges, highlighting a cautious approach by cheesemakers amidst tepid demand. Butter production, although growing, indicates a cooling trend compared to earlier months, demanding strategic adjustments in response to changing market dynamics. Meanwhile, NFDM and SMP are navigating new terrains, reflecting dairy markets' shifting preferences and priorities. Surprising variations in stock inventories, with lower than expected dry whey and lactose, signal complex supply chain challenges requiring vigilance and adaptability. As the dairy industry stands at a pivotal moment, how will these evolving trends reshape production strategies and market competition in the coming years? Dairy professionals must assess how these patterns will influence their business practices and growth potential in an industry that demands resilience and flexibility. We invite you to share your perspectives and experiences regarding these transformative trends in dairy production. Join the conversation on our website and social media channels. Your insights are invaluable to forging a collaborative path forward.
Thank you for tuning in to the Bullvine Podcast. We hope you enjoyed today's insightful discussion. Don't forget to subscribe, share, and leave a review. Catch you next time on the Bullvine Podcast, where bovine expertise and community come together.